It seems a little bit apparent to me that this recent run up in gold prices and precious metals prices is due to the fact that there's a very high probability that interest rates will continue to fall. If we have any hiccup with that train of thought right now, that interest rates are going to come way down, I think precious metals, that might be a catalyst for precious metals to take a little bit of a cool off where they're at right now. Ladies and gentlemen, welcome to another episode of the Bullion Standard Podcast. Today is Wednesday, February 4th, 2026. We are well in and steamrolling ahead right into the year, Charlie. How are you doing today? Welcome.
Thank you. I'm doing fantastic. Back in town after a little trip to Big Sky snowboarding. So very happy to be back in town and hitting the ground running. It's nice to be in the structure.
You seem to be quite the weekend warrior these days.
I've had a few trips scheduled.
Absolutely.
Very fortunate.
Well, unfortunately, I have not gotten to take any trips. It's just been a full grind. That's how it goes here. We are in the growth phase, and no breaks, no vacations.
That's right.
There shall be no leisure time. It's only grind time.
That's right. That's right where you need to be.
Okay. Well, it's where we all need to be, including you.
I've been there.
Yeah. Well, you kind of are there still, but
yeah, I am.
Yeah, we all are. So, Charlie, okay, let's start it off. We have some stuff we want to talk about. There's a bit of timely news going on, particularly with Trump's Fed chair nominee.
Yeah, so the question that I posed to you, Kyle, is will the Federal Reserve be the institution that doesn't survive this next fourth turning?
That's a great question.
Or will it just be the institution that gets transformed?
Well, in my opinion, if the Fed gets dismantled in the next turning, that to me would mean like a collapse of the dollar or a failure of the dollar in some regard, and something new emerging to take its place. I can't imagine a scenario where the current monetary structure survives a collapse of the Fed or the Fed being removed from how it operates today in its current capacity. I do find it interesting that there's these prediction marketplaces like Kalshi and Poly Market, and the probabilities that are being priced in that the next Fed chair, his name is Kevin, right?
Kevin Warsh.
Yeah. The probabilities that Kevin Warsh is the next Fed chair is really high. So I find that really, really fascinating, because just a few months ago we were talking about someone who was way more dovish and way more on the train of taking interest rates way down.
We're going to find out. We're going to see what happens. So it'll be interesting to see what happens at the Fed in the next few years. There's been a massive wealth disparity in our country. That's maybe it started during the tech bubble in 2000. Maybe it was really got a head of steam in the 2008 financial crisis, and then during COVID, the money printer just went absolutely wild.
Do you want to recreate the sound that the money printer makes coming out of the A10 Warthog G4U Avenger autocannon 30mm?
Yeah, let's just go ahead and throw that up on the screen real quick so everyone can take a look at that. We're gonna pose the question, Kyle. What would the world look like with a Fed that is no longer as active? I mean, are we really gonna contemplate whether or not the Federal Reserve is going to be deleted? I mean, we could. What do you think about that?
It seems a little bit apparent to me that this recent run up in gold prices and precious metals prices is due to the fact that there's a very high probability that interest rates will continue to fall. And I think the rate tightening cycle is well in the rearview mirror until it becomes in the front view mirror again. And I think that the big run up we've experienced with gold going about $5,600 per ounce. Of course, it's back down again. It's about $5,000 an ounce today. I think silver is at 87. I think it's fluctuating in the mid to high 80s, and maybe it hit 90 today a little bit. But I think there's a huge expectation, and I think gold is kind of priced in that expectation that interest rates are going to be coming way down in 2026 and 2027. But it does beg to ask the question, what will the policy response be in the next catastrophe or the next
Black swan?
Even a recession, even if we have a little bit of a recession, I think the policy response is such that it's going to be very inflationary. It's going to be very liquidity heavy. It's going to be the G4U autocannon, as we just saw. And I don't see any way around that. And I think that if we have any hiccup with that train of thought right now, that interest rates are going to come way down, I think precious metals, that might be a catalyst for precious metals to take a little bit of a cool off where they're at right now. Mm-hmm. But I don't see that changing anytime soon. I see interest rates, the expectation, especially with like the CME Fed Watch tool, if you look at this thing going out many months, going out, a year, it's the rate interest rates futures traders price in is being the expectation. But I just side note, and then I want to answer your question more specifically, more directly. What would the world look like without a Fed? I don't think, I mean, we really want to get conspiratorial here. It would be something like a whole new regime, I remember watching this film called Zeitgeist in 2007, and the new proposed world currency of, not the world currency, but like the North American currency was proposed, like the Amero or something like that, kind of like the euro. Maybe it's something like that. I'm not sure. I think precious metals will probably play a very large role in whatever kind of new structure would come out of that. But I'm also of the belief too, I mean, think about the, logistical component of if we lost the Fed or if we lost the dollar. I think there might be hypersonic nuclear tip missiles flying at the same time too, would be my suspicion. So I don't know what that would look like. That would be probably the greatest event in recorded human history if we experience something like that.
Okay, so we can rule out that the Fed's going to be removed from its current role.
Well, I mean, we had Weimar Germany, we had Zimbabwe when it failed, their currency failed in 2008. All these things worked until they didn't. And as we've talked about, you're in the passenger seat of a car and Jerome Powell's in the driver's seat. You guys are going 130 in the salt flat desert. And then you go over the cliff and you say, well, Jerome, what are we doing? We're falling to our deaths. How are we going to get out of this? He says, there's no way we're falling to our death. It's just a matter of time before we hit the ground.
Until Kevin Warsh comes flying out of the air, parachuting, and he comes down and grabs both of you guys, pulls the parachute, and all of a sudden we're floating around.
Well, no, because recall, it's death by inflation or death by deflation in time. So there's no way out. That car falling through the air is a representation of the U.S. economy and the dollar. It's just a matter of time before it hits the ground and explodes, because the only way out of this conundrum we find ourselves in, it's like painting yourself into a corner. That's what the Fed has done. The only way out of that is extremely inflationary or extremely deflationary in time. And so I think if we have a deflationary event, that's like a depression, everybody suffers. It's really awful. It's really miserable. Everybody has to, like Peter Schiff, take their bad tasting medicine. If it's really inflationary, we print a bunch. All the money that got printed in COVID is still sloshing around out there. All the money that got printed in the 2008 financial crisis is still kind of sloshing around out there. Of course, if we could look back in history and say in the decade of the 2010s, none of that money came home to rear its ugly head in the form of inflation, because it was actually quite stable during that decade. And it wasn't until the COVID money printer that we had this, 9.2 inflation print in June of 2022, and that's come down.
So what caused the stability after the GFC? Was it Was it just that the money was out of the hands of
Yeah,
consumers?
that's right. We've talked about that. All that money kind of stayed contained in the system as far as I'm concerned. Of course, in COVID, it all went out into the general public's hands. That's never happened before. We've never had that kind of policy response. And I don't know what was Trump talking about recently, like a freedom dividend or like a tariff dividend, whatever that was. I haven't followed up with that, but I suspect that, something like that again could get things going, create that financial friction, get things moving and get things hot again. But yeah, I don't know the answer to that question, Charlie. If it's a very highly speculative question. If the Fed were to disappear, I think it would be World War III, something like that. Because you could imagine the consequences. It's just like everything freezes. There's no more Fed. There's no more bank of last resort. There's no more counterfeiting. So that would be like very deflationary. That would be probably people starving and, doing anything they could just to survive because it would be so blown out.
Okay.
And so it would be good to own a little bit of precious metals to go through something like that.
The whole reason we're having this conversation is to see, what your thoughts are on the impact of, these current changing times on precious metals. So thank you for bringing that up.
Yeah. And I think any kind of new system that emerges, if we think about these cycles in human history, right? I think the next system that might erect itself in face of a failed current monetary order in the world would probably be more tangible, like some kind of gold standard.
Mm-hmm.
If humanity makes it to that point and we all survive the nuclear-tipped hypersonic missiles, that would be of a consequence of the world falling apart.
If we have a major shift in the function of the Fed, like where the Federal Reserve, is maybe reined in by by Congress. Maybe they come in and they say, "Hey, no more of these programs. No more just throwing money out there. You guys have to come to us and get permission." Or there's a new directive. What's going to happen if the Fed is more restrictive?
Well, if the Fed is more restrictive, I would imagine that we couldn't print money out of thin air like we have been. Of course, the whole philosophy of printing money out of thin air is to buy T-bills or, buy treasury bonds, bills, notes, etc., so the government can fund itself.
Let's review some of the Fed's programs that they had running through these last crises. I think this was during the 2008 financial crisis. The Fed rolled out 6 emergency lending facilities. Yeah, in 2008, we had the Primary Dealer Credit Facility, the PDCF, the Term Securities Lending Facility, the TSLF, the Asset-Backed Commercial Paper Money Market Mutual Fund Liquidity Facility, the AMLF, the Commercial Paper Funding Facility, the CPFF, the Money Market Investor Funding Facility, the MMIFF, and Term Asset-Backed Securities Loan Facility, the TALF. So that was in 2008. That was something that apparently hadn't been, rolled out in such significance. And then we also had, during the pandemic, we had more facilities. We had the CPFF, the PDCF, the TALF, the Money Market Mutual Fund Liquidity Facility, which was similar to the AMLF, and 5 other new facilities. We had the Primary Market Corporate Credit Facility, the PMCCF, the Secondary Market Corporate Credit Facility, the SMCCF, the Paycheck Protection Program Liquidity Facility, the PPLF, the Main Street Lending Program, MSLP, and the Municipal Liquidity Facility, the MLF. And so, what if in the next crisis, there are no more emergency facilities where people can just access money? One other thing we should talk about too. So what do you think about, if and when there's a transformation at the Fed where these facilities are no longer tolerated? Maybe that's one way to say it. Maybe they're no longer legal. Who knows? Um, and also, one thing to discuss, Kyle, and I'd love to hear your feedback is, how do you see that these facilities have impacted the wealth disparity? We've talked about the Pareto principle. We've talked about 20% of the people producing 80% of the production. So when this money gets thrown out into the general public, are we just looking at a normal dynamic where 20% of the people will be highly productive with money printer money?
Well, I think that the wealth disparity function is pretty bad. It's a pretty bad side effect. And if we want to think about, well, what are the positive and negative consequences of the Fed and everything? Yeah, one of the negatives is obviously the wealth disparity. Why is that? Well, because people who have real assets, gold, real estate, stocks, bonds, now crypto, I guess, now that we're in the, later years of the, crypto being rolled out here. And even though it's kind of a new phenomenon, but
yeah, what's next after crypto?
Yeah, I have no idea. Precious metals. We're going back. But yeah, that wealth inequality is subject because everybody who owns assets, which are a very small percentage of the overall population. Charlie, the median income in the United States is in like the 30,000s. That means less than half of the population in the United States, if you're bringing home a salary, they're making less than that. Less than like, I think a few years ago it was 33,000, and I think now it's something like 39,000 or something. But could you imagine that's half of people make less than that in the United States? Those people don't own anything. And so when we have these big bouts of policy response, we would call it quantitative easing, money printing, counterfeiting. Obviously, if anybody tried to counterfeit money, they'd be arrested immediately from the point of view of the Secret Service. But when the government does it and the Federal Reserve does it, it's of no consequence. And usually people who promise more of that kind of stuff become more popular.
Celebrated by a lot of people as well.
Right. So those people who don't own any assets kind of get left behind. And I don't see that slowing down anytime soon because we're in this perpetual motion where we have to continually counterfeit money out of thin air in order to keep kicking the can down the road. That's something that has become more and more apparent post 2008. Really, when the money supply just exploded upwards. Again, during COVID, when the money supply just exploded upwards. And then everything inflated. Look at the stock market. I mean, my gosh, look at precious metals. It's a direct response. Look at real estate. Look at everything. It's all been inflated. It's really interesting because we talked on another episode and I said something like the S&P 500 is up so many multiples. I think it was 70 or 80 multiples since 1971, August. But gold was up something like 136 multiples from that date. And so was there really all this growth and productivity, or is it all just a raging paper bubble going back to when gold was disconnected as real money?
So what's the antidote?
I don't know. I have no idea. Because if we stop doing what we're doing, the whole thing just kind of implodes in on itself. And it goes back to the car analogy. It's death by inflation or death by deflation. It's just a matter of time before we hit the ground. Now, could hitting the ground be decades away? Yeah, absolutely. Could hitting the ground be centuries away, hundreds of years away? I don't think this current system lasts hundreds of more years. I just don't see that. That would be one for the record books if that happens. And 200 or 300 years from now, the dollar is still the world's reserve currency. I doubt it. But when it comes to the wealth inequality thing, I don't see any way around that. And I think that will continue to be the trend for as long as we have these policy responses to these catastrophes, where it is to General Dynamics A4U Avenger with money supply and printing money. G4U Avenger.
I mean, what else is there to say about, you know, transformation of the Fed?
I try not to follow the Fed terribly much, Charlie, because I want to be polite here and say the Fed, I believe, are just a bunch of imbeciles. I don't think they really know what's going on either. I think that they can have their data, they can have these forward-looking things. But at the end of the day, there's only one direction this thing's going, and it's that if we continue the current trajectory, we have to print more money. We know that. What's a consequence of that? It's very inflationary. It's very destructive to all these things like stability. People's grocery bills goes up. That's not good. People's fuel costs go up. That's not good. People's insurance costs go up. That's not good. People's real estate goes up. I guess that's good. People's gold goes up. That's good. People's stock accounts go up. That's good.
Yeah,
But
if you own it, and so the conundrum here is, we're in this. I mean, it's an erosion of society where, half the people or more don't have a very simple or easy way to catch up.
no, there's
On owning assets. They're just they're underwater. They're having a very difficult time. And so this is a very serious problem, and so is one of the solutions to this to stop spending money. And I think that's the bad tasting medicine that you've been talking about. That's the deflation. And so are our policy makers going to choose that?
Well, you tell me. Let me ask you. The national deficit is between $2 and $2.5 trillion. What happens when the end of the year goes by and we don't have that money? It's like, nope, we can't. The Fed no longer exists. We can't print that money. Can't buy these T-bills, T-bonds. Sorry, Treasury, you're just going to have to figure it out.
You're going to have to stop spending. I mean, the only option would be, hey, so sorry, we can't pay our bills.
Yeah, you think that's going to get sorted out in 6 months to a year? We would just collapse. That's it. Everything would just come to a freeze. Gold would go to 100. Gold would go to, let's quote Jim Grant, the great Jim Grant. What did he say? $1 quadrillion gold. Gold will go to $1 quadrillion per ounce eventually.
So what would happen to gold if we had a moderate cutting cycle to where we don't have full collapse, full catastrophe? We just had a moderate amount of deflation.
Well, I think we experienced that going from period December 2021 to October 2022, when we started being really aggressive with the rate hiking cycle post-COVID. And we saw what happened. Something really fascinating happened. Both stocks and bonds fell together for the first time, I think, since 1932, in the front half of 2022. But yeah, everything would just fall. Everything would get whacked. We'd probably go into a pretty good bear market. I don't know how long it will last, but we troughed kind of September, October 2022.
And what did gold do then?
It went way down. Silver bottomed at like $16-17 an ounce.
Yeah. Okay, that makes sense to me. That's what I was curious about. So if we had a reckoning in the voting population and everyone said, "Sign me up for some deflation," and yes, I'm happy to go through the pain and suffering of the next 2 years, so gold would then get whacked as well.
It would get totally whacked.
Yeah.
Yeah, because there'd be a opportunity cost.
What if Kevin Warsh steps in and says, "Hey, we're gonna scale this thing back a little bit. The Fed has kind of exceeded its mission here, and we're gonna scale it back, and maybe we start scaling it back one funding program at a time. Who knows?" I mean, that's something to pay attention to.
That would be surprising to me because the current administration wants nothing to do with that. We want lower interest rates. We don't want to cause any chaos here. We don't want people's stock accounts to fall. We don't want people's real estate values to fall.
Mm-hmm.
We certainly don't want gold to go up, but everything else, go ahead.
Okay, so I hear you, but then the next comment is something like, well, we are heading into the precipice point, the catalyst point for, some sort of, major catastrophe and fourth turning. And so, what will that be? Who knows? We're speculating that, there's something up at the Fed, and, we're having, a new leader at the Fed, and what are they going to do? They have a different mindset than maybe the current structure inside of the Fed. Here's another interesting thought. How you've got like the academics, and then you've got like people like me and you who like we're out there
in the trenches.
In the trenches, we're like making things happen outside of academia.
That's how most university professors are, by the way. Like the very in like the high level department chairs, I've noticed anyway, just based on my personal observations, those people they've never had like a board to report to. Mm-hmm. They've never had consumers and shareholders report to. It's all theoretical. Mm-hmm. It's like you go through academia, like finance department chair or something. You go through academia, spend your whole life in academia, and then you only ever go to academia. So you never bring that real world perspective.
Yeah, that like I've always figuring out how to manage humans, how to be with humans, how to be, in the fray of a breakdown.
I've always thought that was fascinating, but sorry, to your point.
Well, I think that's what we have at the Fed. We have a lot of people that are, from academia, and they don't, maybe, I don't know, maybe there's something missing there in the understanding of human behavior. What are we doing at the Fed? Like we're giving a bunch of money to people through the Paycheck Protection Program, and it's just getting dumped into, people's business bank accounts, and we're direct funding, people's personal bank accounts, and then we get inflation. Where did like who didn't think that we were not going to have inflation at the Fed from doing that? It seems pretty obvious to me. So maybe there was a algorithm or a PhD paper written at one point in time where it's like, oh, this can work, and then there was no human behavior considered in that theory, something like that.
I remember Janet Yellen said when she was Fed chair, I think in 2014, she was on an interview and she said, yeah, there's never going to be another like financial collapse event or liquidity event or confidence event ever again. It's just not possible. It's never going to happen again. And then we had COVID.
Yeah.
Of course, COVID was the catalyst, the scapegoat in so many ways. But
so something really happens. Everyone takes the blue pill, and they're no longer in the matrix, and they say, "Oh my goodness, I've been voting for this, and I've been voting for my own pain and suffering unknowingly, and so why don't we voluntarily take a little bit of our medicine now and cure this problem?"
In the late 70s, early 80s, we got Paul Volcker. And that was the time of Reagan's era. And there was a collective thought that we have to really get serious about this inflation problem. And so Volcker came in and took interest rates way up, 15%, something like that. But we could do that back then because debt was 30% of GDP. So we had the leverage.
Now it's like 130%.
It's like 130% today.
I don't know if it's that high. It might be like 103 or something like that.
No, it's way higher than that. I think it's like 120 something. We'll call it 130.
Okay.
So we don't have the capacity to do that in the same way we did back then. If we get a bout of inflation and we tried to take interest rates back up that high, the whole thing just implodes, death by deflation. There's no way that will ever happen again.
Death by deflation because we can no longer afford to print money because the interest on all the debt is so high, and so there would be no choice. There's no more money. Yeah, no more money to pay for all the stuff.
That would be the only way out of an inflationary bout. I was a bit surprised to see inflation come down as quickly as it did, peaking in June 2022. And as we've talked about, there's something called the CPI, which is represented form of the actual CPI, what it would really be if we're calculating it based on the way we used to calculate it, like in the 1970s, the 1980s. But yeah, if we have that run up again, and that would be my expectation in time. I don't know when it's going to happen. I don't know when we'll have a second wave of inflation. Maybe it's later at the end of this year, halfway through this year. Maybe it's going into 2027. But when that happens, we're not going to be able to take interest rates up in the same way we did way back when. It would be something similar to what had happened in this most recent rate hiking cycle from 2021 going into 2022. And everything would just get whacked.
We're in for it. We're in for inflation. We're in for deflation. We're in for transformation. All of these things will happen. And we can make predictions about when, and it doesn't matter because our timing will just be off. They're going to happen. So we're keeping our eye on things. Thanks for everything you're doing on the Bullion Standard front. Thanks for bringing so much value to so many people where they get to retain and capture as much of their hard-earned effort.
Yeah.
I'm really proud of you. Thank you for, caring about doing something that's more than just, making money. It's really great. Happy to be a part of it. Thanks for having me along for the journey.
Yeah, thanks for being on our team. We couldn't do it without you. You're a big part of what we've been doing. So yeah, thank you for being here.
We're gonna keep pressing forward. We're gonna keep building and growing, and we're gonna continue to get through with the breakdowns and create breakthroughs and make things better.
Absolutely.
Okay, anything else on the Fed, on inflation, on deflation, on taking your medicine?
Well, this has been an interesting discussion because we've meandered around so much on the Fed and what could possibly be the outcome of the next Fed chair and that cult regime. And we'll just have to kind of wait and see what happens. I think each FOMC meeting going forward is, I've said this thing. So, I mean, it really depends when you start paying attention to them, but each one is more exciting and more thrilling than the last one, and the one after the next one is always more important than the one that precedes it. So I think they'll get pretty comical going forward, and I think they'll be.
What do you think will be comical?
Well, there's this dynamic that the current administration has a expectation that rates will come down. We saw the market recently get whacked on that expectation that Kevin will be the new next Fed chair, in which case, what are they calling him? Like a hawkish dove or something like that. And his expectations might not align in terms of, the MMT crowd, the modern monetary theory crowd, which suggests, we can just print all this money as we want and everything will be fine for the rest of humanity. So that dynamic at play where it's that push-pull kind of thing, and that's what I think will be comical.
Got it. It's kind of like there's a contradiction.
Yeah, and a little bit of a light. So, yeah.
Okay.
Anything you want to finish up and wrap up with, Charlie? If you have any other questions.
It's the same thing that I wrap up with just about every time we have these conversations. I just see a real need for people to, take on exceptional well-being. We've got some serious volatility. So if you're in the fray out there, seems pretty normal. We're in the volatility. Of course it would be, a little extra stress and anxiety with all this volatility. So just really take care of yourself, get what you need, take a lot of time when you need a lot of time, and really just, diet, sleep, exercise, take care of your health, and, do something good for somebody else as well.
That is some words of wisdom you've shared on a few of our episodes now. So let me tell you about volatility.
Okay.
This is what volatility really looks like. Ready? When silver goes from $120 to $75 in a couple trading sessions, that's real volatility. That is...
that is the essence of
That is
volatility.
That is volatility cocaine.
It's the purest form of the essence of volatility.
Yeah. So anyway, Charlie, would you like to share a few wrap-up thoughts? And before we have a wrap-up thought, I just want to double check. Is there anything else that you would like to ask or talk about before we sign off here?
Let's see here. Let me get
Any departing questions or
I'm going to be
thoughts?
50 years old in 2 years, and my eyes are telling me that that's the case.
That's quite all right.
Yeah, I just was wanting to, really take a look at what's the purpose of the Fed, and like we've had an expansion of, the Fed's discretionary programs over the last
The credit facilities.
yeah it's just been these massive expansions of these facilities, and like I was recipient of some PPP money, I was recipient of some EIDL money, and put it to very, very good use, and like I'm very grateful for that, and a lot of people didn't have access to that. Like a lot of people didn't have access to these things, and so is it actually useful in the long term, to have these things available to just a select few? And it's like, well, then you might say, well, put yourself in the position of being the select few, and of course that's do the best you can and put yourself in the best position as possible, and like try telling that to someone who is making 30,000. Their net income, their gross income is $37,000 a year. So it's really interesting. Has the Fed done more good, or have they done more damage than if they didn't expand their discretionary facilities?
Well, we had a episode about this recently where we said, well, what would the alternative be? What would it look like on a gold standard, just the monetary order?
Mm-hmm.
We wouldn't be able to do all of these, things that are a consequence of fractional reserve banking.
Yeah,
So
we probably wouldn't have
good and bad.
90% of the awesome stuff that we have right now. Like that's all a consequence of economic output. And how do we get the economic output? Like
Debt.
People need money, debt. Yeah. So maybe here's the takeaway. Ready, everybody? There is no right answer. There is no right answer. The right answer is to do the best you can with what you're given, and put yourself in the best possible position that you can put yourself in, given the circumstances, and do your best to take care of yourself, and do your best to pay it forward and pay it backwards, and help out as many people as you can when they need some help.
Right. Absolutely. So, all right, Charlie. Well, go ahead and sign us off.
Okay, if you're interested in retaining as much of your blood, sweat, and tears, as much of your work that you've accumulated over the years, take a look at Bullion Standard Pro, and pay no retail markup on the buy and the sell. I think it's a really fantastic, very inexpensive thing. I mean, it's very life-changing for some who would have otherwise gotten into a situation where they're buying gold in their IRA and paying 50% retail markup. So thank you, Kyle, again for doing that. And anything else?
No, that was great. All right.
Remember, every ounce matters, and so does every insight. Remember to stay informed, stay committed to growth, and hold your Bullion standard high.